Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Welcome to Grain Gab, a show where we sit back and gab about what's on our minds in the grain markets and how it affects you as a producer and what to do about it. Look, the grain markets can be crazy, downright emotional. That's why we're here, to sit down, look at a holistic approach to find a strategy, yet a grounded approach to handling the obstacles that markets may bring our way. I'm Lori Nelsen, your host, and we'd like to introduce Jenny Burker. Jenny Burker is part of the team. She's kind of our background person, but helps keep Kristin and I grounded. Let's put it that way. We really appreciate Jenny being on the team with us and just thought it would be a great opportunity to introduce her. And then we have Kristin Stien. How's everything going, Kristin?
Well, coffee's already empty if that gives you the indicator. So we're doing good, Lori. Good. What's happening today?
So today, the last month, corn market's been pretty much in a really tight range. Soybeans have kind of been bouncing around over the board. Wheat has kind of had a little explosion to the higher side. China's been coming in a big way and purchasing wheat. We've had the December WASDE report adding corn exports to 25 million bushels higher, yet not really seeing the corn market move a lot. South America seems to be getting planted with their soybeans. Crude oil's fallen. We're helping guys rework some old cost of production to pull the triggers on some profitable levels. And, that kind of works into just our 10 marketing rules that we work with guys with. And what do you do with them? So we like to stay with a rule-based approach to help keep you grounded, keep some emotion out it, and aim for some profitability. So today we'd like to focus on rule number 4 and number 6. So risk and opportunities. And risk and opportunities as we look at coming into that January report, Kristin, how do we help guys?
There's some big ones, right? So you hit risk and opportunities, and there's also the knowing your cost of production, because at the end of the day, we want to have some level of peace within this, right? That's part of the reason why we hammer on these rules. These are rules that we basically throughout our time working in this grain industry. Lori, I won't make you say how long you've been in the grain industry. Well, only a couple of years because you're just getting out of college type of thing. But at the end of the day, there are some solid marketing principles that we want to adhere to your point, keep that emotion out, right? So as we're sitting down and having those conversations, and you referred to sitting down and evaluating how old crop went, what you got sold, what you had for actual yields, and readjusting what that means for a number on what you need for the rest of the bushels. We need to be doing something along those lines for the upcoming year as well. Then we can sit there and have an honest conversation about what the risks and the opportunities are in the marketplace, and then how that affects your bottom line. Right. So, for example, let's start with what that cost of production may look like. Right. And we're going to talk about our buddy Joe Farmer, and just use some of the examples that we've seen here the past few months in working with guys and breaking this out. Right. So this is just a random example. Let's say we're noticing costs seem to be backed off quite a bit, thanks to fertilizer coming down, thanks to crude oil coming down, and all of the lovely things that come along with that. So maybe it's somewhere around that 30 to 40 cents a bushel that they backed off. The key here is not to use the numbers that I'm giving you right here, but to truly hone in on what those numbers are for you, right? So in this instance, let's say the cost per bushel is $4.38 a bushel, okay? Lori, what's December 24 corn trading at today?
December 24 corn's trading
507.
507.
All right.
Today.
Been a little push off of this market. I would really wish that, all these purchases that are being made in wheat could actually come in and help the corn story out as well. We'll get into why that's not the case. But let's start at that 507 number, right? Meaning, if I sell all my grain today at 507, I need 191 bushels to break even. Let's talk worst case scenario on a lot of different areas, right? So let's say this Joe farmer who has an APH of 222 bushels takes out 80% crop insurance. His theoretical worst case scenario bushel wise is 177 bushels to the acre, right? So take that at 507 and he's losing $75 an acre. At his APH, he's making $140 an acre at current market. If he gets on the high side of that and grows an awesome crop because we get rain this spring, maybe he's coming into that 250 bushel an acre, which could equate to $300 an acre, right? Now, let's flip that into the price risk, right? So that's your yield risk, yield opportunity, realistically speaking, right? Let's talk price risk because that's a big thing right now.
So, yeah, price risk, we're looking at over 2 billion bushels of corn in our carryout number. That just doesn't really justify a $5 number here.
Right.
And so, risk, if we got a chart to take a look at, that's probably a 350 number.
Yeah. I mean, let's reference back to that stocks number versus price and all the years that we end up somewhere in that 1.8 to 2.2 billion bushel carryout. Are we at $5 corn?
No, it just doesn't justify us that because our buyers aren't interested there either.
Bingo. So the question is, why is everybody buying wheat and nobody's buying corn? Or why is our demand so lackluster? Well, let's take a look at that. If you're a buyer of the physical grain and you sit there and see 2 billion bushels worth of a carryout, are you going to be interested in paying $5 corn? Nah, you're like, I'll be patient on this. Sooner or later, this will iron out and I'll be able to buy it for a heck of a lot cheaper. And so the physical buyers are staying patient in this market. We're seeing it even on the local side. You were in a bad area in Missouri. I was in a bad area in Iowa to where we thought, crops were below what we're used to growing, right? And so a lot of that backyarditis is sitting there and saying, well, this market has to go up. Look at how little of a crop we have. But yet, as I'm sitting here having corn conversations about basis, the buyers are sitting there saying, we've got our needs met right now. We're good. And that's when the majority of producers are well undersold in a market that is well below where we've been the past 3 years, right? So the seller isn't motivated to sell, yet they're getting plenty of supply right now. And so that's kind of that indicator, hey, things are kind of cooling down right now. Back to that profitability scenario, to sit there and say that 350 is in the line of downside risk isn't that far-fetched. And it's a reality that we truly need to understand if we're going to manage our risk well. So I do want to just talk about what the other numbers mean profitability-wise, right? So what 350 means to this specific farmer is losing $200 an acre. Ouch.
Ouch.
Right?
Mm-hmm.
After the last few years of having really good opportunities to make good money, that's going to be a hit, right? And so that, to your point, is what we want to protect. But at the same time, we also want to recognize that there could be some opportunities. We are sitting on dry ground. Granted, it's the middle of December and no crop is made or killed in the middle of December, but that's in the back of everybody's mind right now is subsoil moistures are not there. So if we get an opportunity to be pricing in that 525 to that 550 area, that's anywhere from $200 to $250 an acre in this scenario, right? So there's real opportunity there too. So the question becomes, how aggressive do I get at these levels? And what do I do to prevent myself from losing money to the farm this upcoming year? And that's where it goes into having those conversations on at certain levels, how aggressive do we want to get in our selling? And we're not afraid to encourage a guy to get super aggressive. And then to sit there and say, if that doesn't come into fruition, right? If 550 doesn't become a real opportunity, we need to have our butt protected to this downside by way of puts, right? Get that floor covered, have your worst case scenario taken care of. And especially if you're not willing to sell right now, have the floor underneath that gives you unlimited upside, but it keeps you from losing that $200 an acre because that is a real number.
Sounds pretty simple, Kristin, but really we find ourselves needing to help and have the discussions with the producers to give them that peace of mind in their put coverage of why they have it.
You hit the nail on the head, right? It's simple. It doesn't have to be overcomplicated. It's about actually executing within that realm. So A while back, I had heard some random podcast or quote or statistic really saying the number one indicator as to whether you'll have enough money in your retirement. And Lori, I know it's a long ways off, but we got to think about it now because the number one indicator isn't about the strategy you're using, right? It's not if you're doing some little mutual fund up here or something down here. The number one indicator is whether or not you actually put money in there, AKA whether you actually did something with it, right? And so we need to take a real honest look at what your cost of production is, right? And what your risks and opportunities are in this market and actually putting a plan together that complements or at least defends both of those data points that you have, right?
So having a plan in place, just like you put your seed plan together, your chemical plan, have your marketing plan put together.
Yep. 'Tis the season to be jolly, right? And 'tis the season to put a plan together. So let's get her done.
Well, Kristin, very well stated. Thanks for joining us for this episode of Grain Gab. If you like what you see and hear, please subscribe and hit the like button. It really helps us in the algorithms. Then we'd like to thank Paige and the Insights team for making us look good. And until next time, keep your head up and your feet grounded. Cheers.